Hello, this is Dean Malone with Compass FX. I hope you're doing well today and you get some good trades. What a wild ride we had in the market today as the ECB comes out with an unexpected rate cut. Most economists were expecting things to remain the same. With that rate cut, we saw the euro-dollar come crashing through a trend line that I had pointed out in a previous video, and I'd also had mentioned in a previous video to look for the market to break potentially right around that 34.50 area. And sure enough, we broke that. It had some lows back in this area. We broke those lows, broke through the trend line, the market is pushed down. Since then, we've kind of bounced back up. What I want to do in today's video is to review the previous two videos I did about the euro dollar and the pound dollar before the rate announcements and to give you my thoughts and expectations. Also, I talked about the potential of a bullish pennant in the dollar yen, which that pennant was briefly broken today, but we saw the yen basically implode on itself, and I think there's some reasons why as well. Tomorrow we have non-farm payroll, and it's kind of curious as to what the market will do. I think the market's got to settle down a little bit, and there could be some interesting moves in the non-farm payroll tomorrow. However, I think most of that may already be factored in. There will be some additional items to consider when it comes to the U.S. dollar. We have the Fed tapering debate that's going to be ongoing. We've had the dovish comments out of the Fed. However, the Fed's got to contend with a better than expected GDP number that came out today at 2.8%, and we've had better ISM numbers. ISM manufacturing was better than expected, and so was ISM non-manufacturing. So what I want to do is do a quick review of what's taken place and give you my thoughts. I shared with you my expectations. Sometimes it's good to go back and review. And you know, the idea in trading is you're not going to get it right every time. So review what worked, review what didn't work, so that the next time around you're a little bit more attuned to what may happen in the marketplace. And the idea is not to get it right every time, just get it right more often than getting it wrong. So I did say that I was looking for the potential for the market to move up if everything stayed the same. Well, it didn't do that. We broke, we fell down. Also, I made the comment that the Traders Dynamic Index had this upward trend line and the possibility of a bounce up. Well, it kind of turned, but with today's rate cut, we saw the drop, and obviously we see this continue on down. Take a look at the Dots Guppy setup today. Here's the big move down that we had, but even with the Dots Guppy setup, at the 8 a.m. update, because the announcement came out at 7:45 this morning, I had mentioned to traders when we were sitting right in this area, I had mentioned look for a break of the low and then consider where the low is to the sell entry point. And with the euro making that immediate move down, I felt like there was still additional movement in the downside. And in my Dots Guppy live trade room today, I had mentioned to folks I was trading the sell entry area short and looking for the push down. And sure enough, the market pushed all the way down and tested the 133. And since then, we've bounced back up. If you simply look at the overnight high to the overnight low, we're sitting somewhere near the 50% level right now. I would think, since the market doesn't do V shapes typically, it could be the possibility that we go all the way back down and test 133. Not sure if it'll happen overnight with non-farm payroll coming out, but we could see a test higher, but we have to break this 34.50 area. You know, basically that area I was talking about as breaking below it, we're going to have to break above it and stay above it to see the euro push up higher. But I'm thinking we're not going to necessarily see that. When we go over and take a look at the pound, I also mentioned on the daily that it has a nice upward trend, and it had broken the trend and came down, and I said that there was a low right around that 59.40 area that it would have to break to see it go lower. Well, it didn't do that. We got to bounce back and forth, but you can see here for the day it pushed down. And it got down pretty close to right around that 160 area, the low showing right above the 160. Took a bounce, made a push back above where we started at, and we're settled right now right below the 161. I still expect the possibility of a push higher and a move above 161. We'll have to see again what the non-farm payroll does and how that affects the dollar and affects the other currencies. But again, given the lower rate cut in the euro, I'm not expecting a lot of move there, but there could be the potential for the pound to push higher. Now let's take a look at the dollar yen. For the past number of weeks, I've been watching this dollar yen, and it's been in a pennant pattern, and it's been getting tighter and tighter. And as a matter of fact, if you step out a little bit here, you can see that this is a bullish pennant pattern, and I've been expecting the market to break and push on up. Now, there is a break, and then there's a true break. A break was what we had today. Some would say that really isn't a true break because we didn't get a close above. And we're looking for a close above the trend line and then a test of the trend line. We didn't get that. Basically, it pushed up. It hit the 99 buy stops up here and pushed up a bit higher, about the 99.40 area. Then all of a sudden, we got an implosion and a push all the way back down and literally took out a stronghold of bids at the 98 level. And it pushed far enough down, in my opinion, to stop out those 98 bids, but look where we're at. We're back at 98. I think that was a play back to center. So in order to see what non-farm payroll does, it was kind of an interesting ride to see this push to the up above, then fall back down. Now, what traders will be looking for, since we already have this upward movement in sentiment, and you can see that currently in the square box here, we have the rising green and red line, a little crossover right now, but what I'm noticing is this little upward turn in the market baseline back towards 50. So we could get this little downward move, but as we get towards non-farm payroll, if we get a favorable number, we might literally see a push back up in the dollar yen as we look for weakness in the yen. Now, one comment that I made the other day about the dollar yen and the expectation for it to break was to keep your eye on the euro yen, because I felt the euro yen had enough influence on the dollar yen that it would hold the dollar yen from going higher. Take a look at the euro yen. Euro yen has this upward trend line, and I had mentioned if it doesn't hold the trend line, if it breaks this trend line and drops, that's going to pull the dollar yen down. So today, with the situation of the euro falling and then the euro yen falling as well, we got that little bit of a push back down towards the 98 level. So a wild ride nonetheless. We look for the non-farm payroll coming out tomorrow, and with non-farm payroll, expectations are for it to come out around 120,000. Now, if we're way off the mark, the number comes out much lower than expected, then I see a potential of risk off in the marketplace. And we might see then the euro make a move down lower back towards the 33. And we might even see a little bit of slide down in the pound dollar. If the number's better than expected, we may see a bit of risk on. And that's the interesting part, is having the risk on the marketplace. Typically, with the reflationary trade scenario, we've seen the euro push higher and the pound push higher on good U.S. news. That's reflationary trade, selling dollars and then moving into higher interest-bearing currencies. Now with the euro down at 0.25%, like the dollar, there's the possibility that we get this back and forth with the euro. We'll have to get a little clarity as to what happens with the euro. Here's my thought though. Going into the non-farm payroll tomorrow, I would focus your attention on the dollar yen, not so much on the euro dollar, though I expect the euro to fall back down to 133. The dollar yen though, that would be the one to watch. If the number's better than expected, I see the dollar yen definitely making a move up. If the number's way off the mark, we may see some more strength into the yen, and the yen may stay down here right around this 98 area. It may dip back down to the 97.50 area to maybe the 97.30 area as it tests the bottom of the trend line if the number's way off the mark. Well, this is Dean Malone with Compass FX. Hope some of the information I've shared with you in this video will help you in the forthcoming non-farm payroll announcement. Y'all make it a good day. Get some good trades. We'll talk to you next time. Bye-bye.